Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. I'm a big fan of lemonade, the delicious beverage, but also a big fan of the insurance company Lemonade. And I think they could have a really bright future. I want to talk a little bit about it with my good friend, Tyler Crow. I'm Jason Hall. This is The Smattering. And this is going to be fun because Tyler doesn't really know a ton about Lemonade or the insurance industry, but he's a good person to bounce ideas off of. Hey, Tyler, how you doing?
I'm doing good. Yeah, I was just thinking about lemonade. Where I live here in the country of Georgia, they make a tarragon lemonade. It's the weirdest tasting thing I've ever had, but still kind of good.
Yeah, I'm a big fan of basil lemonade. For anybody that's got some fresh basil in the garden right now, give it a try. Just an idea for a weekend treat. But let's focus back on the reason people are actually here, Tyler. They're here to hear about stock ideas and companies that we like.
So you and I both went to the Berkshire Hathaway meeting, and
Insurance operations are some of its biggest businesses.
right,
Geico, one of its most important subsidiaries.
yes. And one of the questions that Asit Jain got was related to telematics. And he admitted that Geico had struggled a little bit with telematics and that it was something that they were really focusing on a lot. And I do remember right after on social media, the CEO of Lemonade was trying to like dunk on Asit Jain a little bit because Geico was struggling this and Lemonade seems to be much further ahead. So, number one, what is this? Why is it important? And is it a distinct advantage that Lemonade can hold on to?
I'm going to go a little further back and talk about what Lemonade the business is. I think most people watching this probably have a good idea, but I want to talk about what Lemonade's trying to build to differentiate itself from the Geicos and the Progressives of the world and the Allstates of the world. And they're using AI in some smart ways, some artificial intelligence for their customer facing side. So you go to their website and you want insurance, you put in their information, and within minutes to seconds, their AI can determine whether or not you qualify for a policy and they can price the policy out. It's pretty impressive. And there's only a small percentage that have to go to actual humans to do the math to figure out if you qualify for a policy. They also use AI in two other really important ways. They use it for claims, paying claims in less than a second. So thinking about changing the relationship that people have with insurance companies that can be very adversarial, right? When it comes down to getting your money, because insurance companies tend to make their money from your money, that float. It's like deposits in a bank. It's all the money that people pay for premiums that they get to hold and do what they want to do with it until the claim comes in. So the incentives are in insurance companies' favor to not pay, to delay everything they can to pay out those claims. So they're building their business to decouple their incentives to hold that money, like using reinsurance and some other things that they've done. But AI is the front-facing side of that for customers and for potential customers. And then they use AI for some operational things, and it's been really effective. Let's talk about telematics again, since that came up. They acquired Metromile. That deal closed sometime in the past year, and Metromile was licensed in 48 states, I believe. And telematics are like a core part of their business, where you have a device or in your car, you have an app on your phone that records how fast you're driving, where you're driving, how much you drive, how far, all of those things when you're driving, to help arrive at a premium that's more fit to your actual risk, to be more tailored and more specific. So now Lemonade owns Metromile. So they're looking to integrate even more technology into their business. Is that a durable competitive advantage, the telematics? I don't think it necessarily is, because companies can develop the apps and and a lot of companies have these devices. I'm pretty sure Progressive has something that they do that they've been pretty successful with. So all of those things to say, the customer facing things that Lemonade has done have really paid off. If you look at their like important growth metrics, in-force premium, which is the dollar number of policies that are in force at any given time, when they reported first quarter results back in May, 56% increase. The total number of customers increased 23%. The average customer premium increased 26%, because what they're doing that's working really well is they're expanding the insurance offerings they have. They started out with renters insurance and pet insurance, and now they have auto insurance. They have homeowners insurance, life insurance. They're expanding all of their offerings with kind of a land and expand business model, where you get your first apartment. Maybe I need some renters insurance. You go online and you find Lemonade, you get it. You get a pet, you get it. You get the point, right? As your needs expand, you stick with Lemonade, and all of those customer facing things, I think they are going to prove a competitive advantage when you know you can get a claim paid quickly. They have this program where if they have excess premiums, you actually can pick a charity and they will give money to the charity of your choice. So all of these things rebuild the incentives that I think can be competitive advantages. Tyler, here's the most important thing that investors need to know about Lemonade and need to see Lemonade figure out. You can do all of the things about customer relationship management that you want, but if you can't actually do the most important part of your business well, then the economic results are not going to come. And for Lemonade, that's underwriting insurance at profitable levels. So gross loss ratio is a number that they give us that basically is the percentage of premiums at a gross level that they have to pay back to cover claims. And last quarter, it was 87%. It was in the 90s before that. It was even over 100%. You go back to 2021. Their goal is like 70%. And this is a lower is better number, because the lower the gross loss ratio is, the more money's left over that's profits for the business. And they're so far from that goal that investors should be really cautious about this business. We've seen progress. And if we continue to make progress on that, particularly with their growth rates, Lemonade at its size, with less than $700 million in in-force premiums at the end of the quarter, we're talking about $1 trillion market. So there's enormous opportunity. If they can figure out that one slightly important thing about the insurance business, which is actually underwriting insurance at profitable levels.